Welcome, ladies and gentlemen, to another video. We're talking about Canadian Western Bank today. So, Canadian Western Bank is my favorite, smallest Canadian bank we have on the TSX. And as you guys can tell from that vertical line, massive news happened. And that news, you guys can see at the bottom of the screen, is the National Bank is buying Canadian Western. Now, there's a few things I need to go over this right before we start. One, none of this financial advice, obviously. Two, this deal is prone to scrutiny for two big reasons. For one, 2/3 of CWB's shareholders have to vote for the merger. Normally, mergers that come at a very hefty premium is not an issue. They'll basically say, yeah, we're good. Don't worry. We'll approve it. The second thing is the Competition Bureau of Canada has to also approve it. Basically, what that is that there has to be enough market left that the merger of CWB into National Bank isn't gonna, like, oh, they're the monopoly. Like for Canada, for example, Rogers, Shaw, Bell is the monopoly over telecom. So if they were to merge in with another smaller, like another, let's say the fourth biggest company, well, now there's concerns the other two might be left in the dust and might, oh, well, now we can't compete, so we have to, we'll go away. We're sorry. So there is that scrutiny. The second thing is, currently, this price is actually correct almost for what you're getting from the deal. Let me explain. So in this deal, so one, there's no date at all because they have to agree to it. But secondly, is the $52 a share isn't actually $52 a share. It is 0.45 shares of the National Bank of Canada. So that's another huge misconception. People are looking at this as, oh, well, guys, guess what? It's $52 in my bank account. No, it is a share purchase. They are buying shares and giving you theirs, basically. So, and it's actually pretty dang on right now. So if you go 0.45 times 109.49, am I off? 49.27? I feel like I'm off. No, I'm not off. So it's actually for $49, meaning if you were to buy this, you're basically getting almost another $7.50, $8 of extra, basically cash from the equivalent. Now, just like Twitter, if you guys have not been through a merger taking private before, there's normally a gap before the merger, and that gap is people, speculating, will the merger actually happen? You guys can see the stock opened at $43 and still went down. That doesn't make sense. Well, if it's a done deal, 0.45 shares is $49.28. Sorry, $49.28. So that $8 gap is what you see right there. Now, let's assume you're confident the merger's going to happen. You own shares of it. Well, for one, you should keep your shares because you're getting a big bank. You are sadly getting a lower yield, which for me kind of irks me a bit. 29.28. But you are still realizing a 14.9% gain. That seems incorrect to me. Oh, wow. No, that's actually it. So you're still, so if you buy it here at market close today, and let's say the Canadian National Bank stock just flatlines and nothing happens, you're technically realizing a 14% gain off of this deal happening. Again, the issue is the meeting needs to go through, it needs to vote for it, and then the Competition Bureau has to give it a thumbs up. So there's those standing in your way. Now, for National Bank, this is awesome news because Canadian Western Bank was mostly known for focusing on Western Canada, Saskatchewan, Alberta, BC. They have a presence here, especially with small cap companies. A company I've talked about numerous times before, Decisive Dividend, uses Canadian National Bank as their bank lender. Like, any debt they have is through Canadian Western Bank. There's a whole ton of small caps on the TSX Venture or private small family businesses that use Canadian Western Bank. Normally, because it being a smaller bank, it's forced to give you better offers than the bigger guys, or it has some form of a benefit. Now, all that goes straight into the Canadian National Bank. Now, because they had to issue $500 million of share, that's why the stock price fell. Now, before I get corrected, oh, it was $1 billion. It was not a billion because someone, the pension fund for Quebec, said we will purchase, we'll give you $50 million in receipts, or sorry, 500 million in receipts. So they only had to issue 500 million, which is why you don't see the stock price falling way more drastically. Now, for Canadian Western Bank, you guys can just see that straight line. It has not been this low since March of this year, which is actually not that bad of a deal. Now, saying that, it also, like Canadian Western Bank, has a low payout ratio. And let's be honest, the National Bank is not going anywhere. So right now, if you were to buy it today, you get a 4% yield on it. That's not bad. Honestly, that's not bad. For the Canadian National Bank, that's really not bad. The biggest thing, though, with Canadian National Bank is, one, the low payout ratio is about 40 to 45%. Well, here it says almost 45. But the biggest thing is this dividend growth is pretty damn consistent. You get about, so you can see right here, 4. You're getting around 8 cents basically a year. That is not bad. And I'm not guaranteeing anything, but you guys can see how it was doing like 5. Like it was like, you see right here, 87, 5 cent hike, 5 cent hike, 5 cent hike, and then it dropped down to 4. The Canadian Western Bank, like, they have low employees. They only have 2,000 employees throughout the entire company. So you can imagine them joining National Bank. They'll probably just continue operating like normal, just like a baby subsidiary of it. But you can imagine they can probably continue to grow their net income, or at least remain flat. So overall, this is a good deal. But overall, would I buy it? Personally, I want a higher yield than 4%, which is why, honestly, I was looking at CWB as like, well, this is kind of a no-brainer. I love CWB. But, one, the yield right now is probably like 2%. I would not even consider it. If I'm being, 100% honest with you, I wouldn't even bother. If you're buying this thing for the yield, don't bother. If you're buying it for the possibility of the merger, again, it's up to you. If you think the vote's going to go through, which, note, the pension fund of Quebec, which is a pretty, they can pretty much talk their mouth out and be okay. Because of them backing National Bank, I have a good feeling this is going to go through. The other thing is you have to be comfortable going from Canadian Western Bank to National Bank shares. You're getting a lower yield. Now, again, if you leave it, right, like if you own it at 24, bro, you're doubling your, like if the stock of National Bank goes up by the time the merger is complete, you've like doubled your money. You're fine. Just sell your National Bank shares and enjoy your 100% gain. But if you're at Canadian Western Bank, you're like, I don't think the deal's going to go through. I hate national banks. Like I hate the yield. I would rather buy, BMO or something else. Might be a decent idea to sell it now. Take your gain. You lose 14%, but you've already almost doubled your money anyway. Take the gain, move it elsewhere. Now people are saying Laurentian Bank could possibly be another target. I will be honest with you. I hate this bank with a burning passion. I hate this bank. It's the first bank in Canada in years to cut the dividend. It's the first. It's so much smaller than National Bank. It is literally a baby, in my opinion. And you look at it, it was making $1.91. Now it's making 90. And it just goes lower and lower and lower and lower and lower. And they have to constantly. They've done this now twice now. Revamp their strategic plan. Like, why? At this point, why even bother, dude? And honestly, it's running up on the hype that there's a baby possibility it could be acquired. So if you even were looking to be like, well, banks are going to start acquiring other banks, guys. This is a no-brainer. Be aware. There's a very freaking good chance this one just might get hyped up because of CWB and then drop back down when no one wants to buy it. See, because LB already tried finding a buyer for it 2 years ago, and no bank wanted it. Every bank was like, no, we're good. But then look what happened. The same time they said no to LB, HSBC, yes. Canadian Western Bank, yes. So there's clearly something about this bank the bigger banks are looking at, and either the CEO or management is like, oh, instead of 29, it's $50 a share. Maybe they're asking too much. The other, but there's that possibility. The other one is it is it's a toxic bad bank. Stay away. So if you own this one, take your 6% gain. Not financial advice, because maybe something will come out like in a year that it's going to get acquired. I hate this bank though. So if I was to own this one, I would get out right now with my 6% gain. But with that said, ooh, sorry guys, a sneak peek at what I'm doing. But you know, I wouldn't. I personally wouldn't buy any of these as of right now. But there's some things for you to consider if you're a shareholder. So you know, keep that in mind, guys. Have a good one. Apologies for the very lackluster uploads in the last like 3 months. Bye.